I'm Charles Guinn, and I'm a certified aging in place specialist. Today, I'm going to share with you some very important information about the effect of a reverse mortgage on income tax, Medicare, Medi-Cal, or Medicaid, and SSI and VA benefits. People who have been looking into using a reverse mortgage usually know that it gives the homeowner access to some cash from part of the equity of their home with no required loan payments. However, they must keep the property taxes and insurance current and maintain the home as livable as with any loan. They also know that they may get all or most of their money at one time in monthly payments, or leave it in the line of credit for use later if they need it. But often they are unclear about how having a reverse mortgage and taking the money from it affects their taxes and any government benefits that they may be receiving. I believe that these folks should have some basic understanding in this area and at least know enough to know when they should ask for professional help. At the outset, I want you to know that I'm an aging in place specialist and a reverse mortgage advisor, not a tax professional or financial advisor. The aim of this presentation is to make you generally aware of these areas and when you should consult a CPA or lawyer on these subjects. First, let's look at the tax perspective. You've probably seen ads saying that reverse mortgages give you tax-free money. Well, in a way that's true, but I don't believe that's the correct way of saying it. In reality, any payments you receive from a reverse mortgage are loan advances, not income. And according to IRS publication 936, that's why it's not taxable. The important thing here is that it's not income, it's a loan, and eventually will have to be paid back. And now on to, is the interest deductible? The short answer, according to IRS publication 936, is any interest accrued on a reverse mortgage is not deductible until you actually pay it, which is usually when you pay off the loan in full. Well, that's really a long answer. The short answer is no, except sometimes. Since no monthly payment is required on a reverse mortgage, you would have not made a payment and not paid any interest. However, there are some people who use a reverse mortgage as part of a financial plan to build cash for later in retirement, and they make payments into their loan. A loan payment first pays the current interest due, and then any remaining amount reduces the principal. These people would have paid interest, and therefore some or all of it may be deductible. The professional that prepares their tax return should be able to advise them about how to do it and how much deduction they may take. For more information about using a reverse mortgage to build access to cash, see my website charlesguinn.com or my other videos as they come out. What most people don't realize is that there could be a deduction for the interest and loan costs when the loan is paid off. This can happen when the homeowner moves and sells the property, or upon the death of the homeowner when the heirs either sell the property or refinance and keep it. However, in the same IRS publication 936 that I mentioned before, it states that there are limits on home acquisition debt and home equity debt, each of which may come into play. That is why before you enter into a transaction to sell the property with a reverse mortgage on it or pay off a reverse mortgage loan, you should consult with an estate attorney or a tax professional for advice. It's my understanding that the deduction could result in a significant tax savings if done correctly. But you could lose it all and incur audit problems if done the wrong way. It's important that the heirs who receive a home with a reverse mortgage be informed about this possible tax deduction, and that they should seek advice from an estate attorney or a CPA about how to structure the real estate transaction so they don't lose it. Next, let's look at Medicare and Social Security. These are programs that you qualify for regardless of your current income or assets. having a reverse mortgage does not affect regular Social Security or Medicare benefits. It's different when it comes to Medicaid or Medi-Cal in California, VA benefits, supplemental Social Security income, SSI. Qualifying for these programs is dependent on the amount of cash or liquid assets you have on a monthly basis. For example, if the total liquid resources, including other bank funds and savings bonds, exceeds $2,000 for an individual or $3,000 for a couple, you would be ineligible for Medi-Cal or Medicaid. This does not mean that getting a reverse mortgage is not possible for you. If you are on one of these programs, you can get a reverse mortgage and use the funds if you structure the loan correctly and you use the proceeds correctly. In general, funds that you retain in your account as an asset could impact your eligibility. Therefore, any reverse mortgage proceeds that you receive must be used immediately. For example, a Medi-Cal recipient who receives $4,000 in a lump sum for home repairs must spend it all in the same calendar month. Any residual funds remaining in your bank account the following month would count as an asset. This is only some general information and is not complete. There are nuances in the laws governing these programs, and it takes an expert to give you proper guidance. It's very important that you consult an expert in the government benefits program that you are using. Competent reverse mortgage loan officers will know that these are areas of concern and that they should not put together a loan structure for you without you receiving guidance from an expert in this area. The loan officer should also be sure that your heirs and any people managing your care understand how to use the loan correctly so as not to cause you to be ineligible. There's a lot more to know about reverse mortgages before you would get one. One way to learn about them in detail is to visit my website at charlesguinn.com. Also, you may see more of my videos that provide simple, easy to understand answers to questions such as, are reverse mortgages really more expensive loans? What are the new financial and credit qualifications? What is the secret of reverse mortgage variable interest rates? To get the latest videos, you may want to subscribe to my channel. The home equity conversion mortgage was designed to help people with certain financial needs and goals. Correctly applied, it can help you have a place to live for the rest of your life. But if used the wrong way, it can be devastating. So I would like to leave you with one thought. Don't get financial products like investments, insurance, and mortgage loans on the internet or over the phone from an 800 number phone salesman. Make sure you know the qualified professional you're dealing with, where they're located, how to contact them after the loan closes, and know that they are dedicated to doing what's in your best interest. And that should include telling you not to get a reverse mortgage if it's not the right thing for you. For more information on this topic or anything to do with aging in place, Social Security maximization planning, or reverse mortgages, please visit my website at charlesguinn.com. Thank you.